What is up, pro trader? Welcome to my channel. Today I'm going to be taking you through the basics of trading the harmonic patterns. Yay! And why am I doing that today? Because today happens to be a very good day. Yeah, I'm feeling good. I'm feeling good. I'm feeling good. I'm feeling good today, and maybe because I'm close to 500 subscribers. Woo woo! Yeah, so thank you all for subscribing, and if you're new to the channel, don't forget to subscribe because this is a channel where we teach you not just trade but to trade to profit. My name is Gloria Zoe. I'm popularly known as Pips Grabbing Chick. I'm a Forex trader and the creator of the 17-part video course titled Trade to Profit. Now, this video is designed to help you trade to profit. Like, there is no two ways about it. We teach you a lot of strategies based on market structure. These strategies are designed to help you profit. If the strategy is not going to help you profit, it wasn't taught in the video, because the only strategies taught in the video are strategies that will help you trade to profit. So go get the video. If you're yet to get the video, go get it. Check the description section. You click on the link and get a video, because this market is a market that will pay you for the rest of your life. So invest in your education. Whoop, whoop. All right, so let's get to it. So today I'm going to be taking you through the basics of trading the harmonic pattern. Now, the harmonic pattern is one of the aspects of the 17-part video. So, of course, I won't go in details, but I'm just going to give you the basics. The basics that will help you begin to use the harmonic pattern in your trading. In most of my videos, I've talked about the BTM strategy and all the other strategies. So, in this video, I'm just going to focus on the harmonic pattern, all right? The basics of harmonic pattern. Now, what's the harmonic pattern? This pattern is seen as the XABCD pattern. It's sometimes called a geometrical pattern. Yeah, maybe because it's got all of those geometrical progressions or geometrical shapes. Yeah, whatever. So we're going mathematics on this one. I'm not good at math. I got F9. No, I got a B in NECO, but I got an F9 like I passed. So somehow I build math. So this one is kind of mathematics-ish, but it's not really into it, calculus for that math. Let's get down. So so this video is going to teach you how to trade using the harmonic pattern. Okay, so the harmonic pattern is a market geometrical pattern that helps you spot major market reversals. You know that we're all about market structure, so we want to see those indications, those things that will let us know that price is at a level where it will reverse, it will turn around. So there's so many structures that will help you know if price is at a turnaround level. So one of those structures is the harmonic pattern, the XABCD pattern. Now, some people talk about the harmonic pattern, they talk down on it, and I just look at them and I just laugh. Why do they do that? Because they tend to know, I don't know, but for me, this pattern is one of those patterns that works. If it's going to fail, you see it right from the get-go that this thing will fail, but if it's going to succeed, it will succeed. Now, one of the reasons why the harmonic pattern fails is that people tend to trade it at stupid levels. Like, people just say, okay, XABCD pattern, you see it in the middle, you trade it. No, you don't just trade it anyhow. If you trade it anyhow, you just gonna be, the thing will just be turning on you. So you want to trade it, you want to trade it well, you want to trade it well, you want to trade it well. There's a strategy to it, people. This is the market of strategy. There's strategy to everything. Everything has a strategy. So you need to know how to, strategize. Yeah, that's the word. So trading the harmonic pattern has a strategy. And what's the strategy? The strategy is to trade it at the right level, at the right zone, at the right place. Because being at the right place at the right time, that's what opportunity is made of. Got it? All right. So this pattern is called the XABCD pattern. So let's write it out. Let me draw it out. Okay. Yeah, that's it. The XABCD pattern. All right. Now, based off market geometrical structure. I'm feeling goofy today. Don't take life seriously. Like, sometimes you need to just cool down, relax. Cool down, relax. Especially in this market, when you know how to trade, begin to play around your chart. Just play around it. Relax, don't kill yourself. All right, so this, like we said, is a geometrical structure. I think I've mentioned geometrical structure over and over again. Let's continue. Okay, no, I'm not high. So XABCD pattern. Before you begin to trade this strategy, before you begin to go into this strategy, you need to know how to use the Fibonacci. In one of my videos, I've taught you how to use the Fibonacci, right? So if you've not seen that video, go check it out. How to use the Fibonacci. So you need to know, you need to have a proper grasp, a proper understanding on how to use the fib. So if you can use the fib, you can trade the strategy. Now, like we said, it is mathematical. So that means it's got a formula. There's a formula to trading this, and the formula I'm gonna teach you the formula right now. You ready? Get your pen, get your pencils, get your paper, write it out. So the formula is this. I'm gonna type it out so you can have it. X A B C D. So the coordinate, I like to use the word coordinate. I think that's what it is anyway. So the coordinate, you know, has to follow that formula. So the general formula is this. All right, so here's the general formula to trading the harmonic pattern. X to A equals B equals 38.2 to 88.6. Like I said, there is a formula to this, so you want to make sure that you get the formula right. A to B equals C equals 38.2 to 138.2, and X to A or C, depending on the direction of the market, equals D equals 78.6 to 161.8. Alrighty, so that is a general formula. I'm going to take you through how you can do that real quick. Remember, this is the part 1 of this video. There's going to be a part 2, so let's not overload you with information. Alright, so this is the general formula to trading the harmonic pattern. That means if you know this formula, if you know the formula, you can trade the harmonic pattern. Yeah, that's it. Ooh, I've just given you a little secret. Yeah, this is it. You know, pretty much like E equals MC squared. You know that? You can control the world. Alright, so this is the general formula that will help you trade the harmonic pattern. Once you can do this, you can trade it. Now, how will you apply this formula to your trading? That's what we're going to talk about real quick. But before we do that, let's even understand what these X and these A's and the B's and the C's, what do they represent? These simply represent market movement. The market swing highs and the swing lows, and the swing highs and the swing lows. And like it's common or popular with structures, there is the bullish and the bearish one. So there is a bullish harmonic pattern and there is a bearish harmonic pattern. And also, there is also a way that you need to spot it before you can begin to map out the structure. All right, first you spot the pattern, and then you begin to measure the pattern using this formula. So in the next video, I'm going to be teaching you how to spot it. But for this video, I'm just going to teach you how to map it out. Capiche? All right, so let's go into how you can begin to map out this formula on your chart. So let's have that formula written out. Let's have it there so that you can know it. So I'm going to take out all of this. Oops. All right. So now we're going to learn how you can begin to map out this formula on your chart. All right. So first off, you want to identify the pattern. So having identified the pattern, the next thing you want to do is try to draw it out. So one of the things I try to look for is the pattern. All right, so once you spotted the pattern, you now begin to draw it out. So this looks like one of the harmonic patterns that we're going to map out. In the next video, like I said, I'll teach you ways that you can begin to spot the patterns. All right, teach you ways that you can begin to spot the pattern, and when we're done with that, we'll now begin to try to spot it yourself. Because before you map it out, you need to spot it. So let me try and make this big enough for us to see. Alright, so when you're placing your fib, you want to make sure that the fib is well placed Don't ignore the wicks. Like I said in the last video, the wicks tells you the level that price has been, price has gotten to, so you want to take note of the wick. All right, so it's very important. Don't ignore the wick. Don't ignore the wick, because the wicks don't lie. Okay, so we've gotten the B level. We said X to A. So X to A, what does that mean? It means that you know how the market moves, swing high, swing lows. You've learned about all the trend, right? So price picks up, for example, and then it gets to this point, and then it picks down, and then it gets to that point. After picking down, it picks up again, then gets to this point, it picks down. So pretty much this regular move that you normally see in the market. So when you can see all of these moves simply tells you the level, all right, the levels of lows and levels of highs and levels of lows and levels of highs that the market is creating. So these levels are seen as the X, A, B, C, D pattern. Okay, so when you begin to identify these patterns, then you will be able to trade the harmonic pattern. So basically the X is seen as the level of support. All right, it could be at the bottom or it could be at the top. So if X is seen at the bottom, it's seen as a level of support. And it's seen at the bottom if it's seen at the bottom, it's seen as the level of support. If it's seen at the top, it's seen as the level of resistance. So the level of resistance at the top, that will make it X. So if X at the top is resistance or support, you already know all this one. So all right, so X in this structure right here, X is a support. So support, A, resistance, market dropped and created another level of support, which is the B, and then it rises to create another level of resistance, as the C, and then it drops to create the final level of support, that's the D, and then from that point you begin to look for entries. All right, so the D point is the point where you look for entries. Trust me, it's not that difficult. It's not difficult at all. Once you understand it, you understand it. All right, so now that you know the levels of the X and the A's, let's get to it. So first off, you want to spot the pattern. So once you spot the pattern, you want to begin to draw it out. I want to make sure that this video is as simple as possible, so that even a beginner will understand it. So this structure is in a W format. All right, I'm sure you would have noticed the first drawing was in the M format, so I'm sure that'll be clear. So this structure is in the W format, so that means this point right here is where the X is. So that makes this point what? Resistance. Yeah, you already know. So that makes that point resistance. So this is the X level, resistance. So price got to this point and it dropped all the way down here. So this level right here is support, and that level is seen as A. All right. So you want to see those levels first. As soon as you see those levels, it is very easy for you to begin to draw out your structures. Alright, so X to A. So X to A. So when you take your fib, you want to measure out those levels. Take it from X, drag it to A to see what this will give you, because you already know that this technically will be what? It will be B. Right? B. I just B. Like, we're going ABC on this one. Yeah, we're going ABC on this one. Alright, so it's actually very simple, like as simple as ABC. Like I said, it's not algebra. It's not algebra. Like you are not finding the function of anything. Alright? Yeah, actually, it's a function of some, yeah, whatever. Okay, so X to A gives you B, and that's the B right there. You want to see the B within the range. And what's the range? 38.2. If it's at 23.6, you don't have any business with it. That's not. It's out of the formula. The formula says you want to see B at 38.6 or 50 or 61.8 or 78.6 or somewhere in the middle, 88.6. These levels, that's where you want to see it. So right now B is within the range of the formula. B is at what? 78.6. Boom. So it's confirmed. We got it. So you take it out. Now you've seen your X, you've seen your A, and you've seen your B. So the next thing you want to see is your C. So what's the formula? A to B. A to B will give you C. So you take your fib from A to B, you want to see the C level. Alright, so like I said, always make sure you position your fib properly. Because sometimes when you drag it in place, it tends to misplace. It tends to go all over the place. So you place it well, place it properly. All right, so when you do that, you get your C. Right here, this is C. What's the formula for C? We said C could go from 38.2 to 50% to 61.8%, 78.6% to 100 to 88.6 to 127.1 to 138.2. So you could extend all the way to the to the extensive level of the Fibonacci, right? So you get all the way to this point, but it mustn't go beyond. You know, this is 141.4, so it mustn't go beyond that level. This is the level. This is the threshold, right? It shouldn't go past here. It could wick it, but it shouldn't close past it. You shouldn't see a candle closing past this level. Yeah, it could. You can see a wick, but don't see a body. Yeah, that's what we're saying. Don't see no body there. You can see a wick, but don't see a body. You see a body? Ignore it. It is not a harmonic pattern. All right, so that's the level. That's the green line. That's the red line. Don't go past this red lines. Yeah, I wrote a book titled Red Lines. Yeah, I'm a writer too. Yes, I trade Forex, I train, and I write. Busy, right? Actually, I am. Alright, so this is the level where you want to see extend to. That's all. Beyond that level, you don't have a business with that trade. So now that you've seen it, what's the next thing? So you've seen your X, you've seen your X, you've seen your A, you've seen your B, and right now you just saw your C. So it's confirmed. This is a harmonic pattern, because the minute you see the XABC, it is valid. It's a harmonic pattern, and the XABC falls within that formula. It is a harmonic pattern. But why? Because the D is where you enter the market from. So here is a simple trick. You can buy from the C to the D. Yes, you can. All right. Check out the W formation right here. W, buy. And then when price gets to the D, you can sell it all the way back. That's what we're saying. So buy it all the way to D and sell it all the way back from, you know, like that. So some people do that. I do that sometimes actually, because it's pretty much like trading your ABCD pattern, right? I hope you know that one. Alright, so now that you've seen all of these patterns, the next thing you now want to see is the point where you enter the market from. So according to the formula, take it from X to A. Why are we doing that? Because A is lower. Assuming C was lower, say C is at this point, it would have been X to C. Right? So we're basically capturing the entire structure. That's what we're doing, because that's what will give us the level to enter from. So X to A, that's the whole structure. So place your fib properly. You want to make sure you do that. Let the 100 be at the wick and the 0 at the wick also. All right, in this direction. So when you do that, what are you expecting to see at this point? You're expecting to see the level where you enter the market from. Now, the formula says that you want to see that X to A or C takes you within a range of 78.6 to 161.8. That's what you want to see. So it could be at 78.6, it could be at 88.6, it could go past it. And usually when it goes past 100, it tends to go beyond. So it could be at it could be at 127.2 or 141.4 or 161.8. That's just a range. Like, it could be within all those levels. Now, I'm sure you're asking the question, so how will I know the level that I to now stop? That's where the different type of harmonic patterns comes in. So it's a full class, people. But like I said, this is just the basics. Alright, so the different types of the harmonic pattern will now begin to let you know the actual D level, or the actual B level, or the actual C level, because these are the different types of the harmonic pattern. In subsequent videos, I'll talk about it. But for this one, I'm just going to show you how to map out the harmonic pattern. Right? So where do you want to see D at? You want to see D within this range. So in this structure, D extended all the way, because you would have noticed it anyway, because when you see the B gave us that 78.6-ish, and the C also gave us that 78.6-ish. So when you see stuff like this, you're pretty much expecting the market to give you or extend all the way up to this point, because structures like this is tending towards a Gartley pattern, and the Gartley tend to have this kind of entry levels within the 127.2 to 141 0.4 areas, and then the bat and the crab tend to extend to 161.8. So this has already given us that entry level. So this one went all the way. This was a very crazy week right there. But I'm not gonna ignore it. I'm gonna take it. I'm gonna take it. Because at that point, they flushed out everybody, took all the stop losses, and then the market just went on a serious nosedive. So that's your harmonic pattern right there. The minute you see your structure, the next thing you want to do is to map it out, because when you map it out, you now begin to trade it. Now the truth of the matter is that when you begin to see those D levels, you begin to know that this is the zone I watch. When people trade this Forex market, sometimes they come into the market with a lot of ideals, right? They come with a lot of ideals. They want to be seeing the money. Like the market should just tell them, this place, yeah, this is where people buy it. No, don't buy it, sell it, don't. Well, actually, the market will tell you if you're privy enough to observe it. It will tell you. So those levels that you begin to map out, that you begin to mark up, out, whatever, those are the levels where you begin to watch. That's what we're saying. You begin to watch those levels. What are you watching for? Begin to watch for your entry confirmations. Yes. But if you don't know where to watch, that's when you don't know what to trade. But if you know the levels to watch, then you know what to trade. So when you create a level that this is the D level, this is the level I'm going to look to enter the market from, as soon as price gets there, you already know what is going to happen. Like it just feels magical, it just gives you this feel of like am I a magician? Like is it that I'm doing magic? But you're not doing magic, you're just seeing those levels. Like you're practically seeing the money. The market is telling you this is the money. But some people just come and show me the money, show me the money. And even if the market is showing them, they are not even seeing, they are blind. But here I want to teach you how to open your eyes and see profit and loss. All right, that's what we're doing. Teaching you how to see profit and loss. Yeah, it makes sense, right? Yeah, it does. All right, so now that we've seen the level, the zone, what do we do next? We draw out the structure. Simple and short. Like it doesn't get any simpler than that. I talk a lot, I'm a teacher. Sorry. So it doesn't get any simpler than that. Just put the structure right there and boom, 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 you have it there. So let me just adjust it. So after placing it, you adjust. I'm heavy on colors, so that's why you're seeing this beautiful color right here. Is it my mouse? Maybe it's my mouse. I'm hungry mouse. Don't worry, I'll get you Tom. Get you some Tom. Alright, so boom, 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 boom. Okay, place. Yeah, whatever. Okay, so you see the structure, right? It's clear. So this is the harmonic pattern. Now what is happening? What is happening right here? Now something is happening right here. You see what this thing is doing? This thing is giving us opportunity for money, right? Because right here, the market is even coming to give us another CG's head and shoulder. Now it's clear, right? It's clear, very clear. Now see what now happened at that point. See that drop, clean drop. So if you see a spike like this as a trader, so let's say you were targeting this zone and price pushed all the way up, you just be like, wow, this thing just pushed up. And you begin to watch. So after seeing this spike, you don't have to say, I'm afraid though, this thing spike like this, maybe to continue to go up. It's not going anywhere. Don't worry yourself. It's not going anywhere. What happened? Price just went all the way down to down place. And guess what? This thing is coming down further. Where's it coming down to? Yeah, our wage is coming down here. Right? Are you thinking what I'm thinking? You're thinking the same too, right? Yeah. Our wage is coming down all the way down. Now take note also. This might not get all the way up here. One of the perks to trading the head and shoulder pattern is that the shoulders are not always of equal height or equal levels, right? Sometimes one shoulder is higher than the other. I bet you didn't know that. Maybe you did. So it doesn't have, the shoulder doesn't have to be perfect, but there should be a shoulder, the left and the right shoulder. Okay, so I'll wager that this thing will probably push all the way up here. If it pushes further up, well and good. That's the problem. But here or here, so what does that mean? This is zone now. So the buy is still strong. I'm not rushing. Like, I'm not rushing. This market, you don't need to rush. Don't rush. Slow touch. It's a bull bar. So you don't need to rush, alright? You just chill. So we're still balling the buy. The buy is still a balling buy. We're still balling that buy. So ball the buy, and then what? You fall with it like a pawpaw. You fall like pawpaw falling, boom, down. Now here's another structure, right? I'm seeing something like another bullish harmonic pattern. So let's measure it out, see if it fits. Let me take this out. So when you begin to see these harmonic patterns, you begin to see them back to back like that. Like, it's just clear. Market is clear to you. You don't need to overthink anything. Like, don't overthink it. Don't overthink it. Just mark out the zone. If you mark out the zone, if the zone trashes out, you clean it, mark another out. Don't overthink this market. It's when you're now overthinking, that's when people can just come from anywhere and just be scamming you with signals. Because you're overthinking, you overthink to the point that the market will just move and leave you. You are still thinking. And then when the market now start moving, I say, yay, I should have entered. Oh, yeah, enter. You not enter. Bye, it will flog you. You come out. Yay, I should have my money. So don't overthink it. Just follow the process. Don't kill yourself. It's very simple like that. So take it from X, right? This is X. This is A. Boom. So this is B. And what did B give us? 50%. 50%. All right. So we're likely looking to see a bat formation, because bat standard 50 is the B entry level. Standard B 50 for bat. All right. So now that you see that X to A, so you measure the A to B. Don't mind me. I play a lot too. So take it from A to B. Don't be serious, like I said, don't be too serious in this market. So the market will not gonna give you hypertension. Alright, don't be too serious. Take life slow. Alright, so look at this one. Like I said, this thing can weak. It can weak. Only weak. It can weak away, but it shouldn't close on it. Alright, so this is a valid C level. Oh, hello. This is not even giving us a bat. This is giving us a cipher. Yeah, when I begin to talk about the different types of harmonic patterns, I'll tell you why this is a cipher pattern. All right, so this is a cipher pattern because this is a C valid cipher pattern right here. So it didn't go past. No, it didn't. Okay, so good. So take it out. That's the C right there. So when you send the C, what does that tell you? It means there is going to be a D. So what's the D entry level for a cipher pattern? Usually 78.6. So I'm not interested in that one. This is where I'm stopping. Argue with your keyboard. So this is where I'm stopping. Alright? So boom. 78.6. You see that? Did you see that? Okay, so what I'm looking for now is to see this, to this point. So I'm guessing that this thing will still fall down to this point. So let's not overstretch it. Let's just sorry for it and say maybe it will fall down to this point. So what does that tell us? It means that there is a bullish harmonic pattern right here, and then this thing can fall all the way back to this point. You understand me now? That's what one of my students used to say. You understand me now? So there you have it. You've got two different types of harmonic pattern right here. This is the bearish harmonic pattern. This is one that looks like a W, and this is the bullish harmonic pattern. This one that looks like an M. Capiche? Chill. Okay, so X to A, you want to see it between the levels of 38.2 to 88.6. A to B, you want to see within the level of 38.2 to 138.2, and then X to A or C. Now, did you take note of how I placed the fib for this particular one? It was X to C, right? X to C. Why? Because C is higher than A. So X to C, and then we're expecting to see price to drop all the way to this point. So I'm estimating that it could fall all the way down to this point. So let's flip it again. All right, so I'm of the opinion that it could even fall all the way down to this point. So let's just give it an 88.6 entry level, because Cypher tends to extend 78.680, although some traders trade it within the 78.6 level, but I mostly go on those 78.6 to a little bit of the 88.6 level. Look at my W formation right there, and ball it, just ball the money, take the profit. But technically it has pushed, pushed a little push, but I'm still of the opinion that it could still push down. So notwithstanding, this is not a sell. Don't sell this here. Don't do that, because this buy is still very strong. You can push all the way up to this point and then push back down. So this is part one of how to trade the harmonic pattern. So first off, you want to spot the pattern, and then you want to map out the pattern following the formula. So the formula is X to A to give you B, A to B to give you C, X to A or C to give you D. And D is the point where you enter the market from. Did you learn something today? Yes, you did. So if you learned something today, don't forget to like the video and subscribe. Click on the notification bell so you get more videos as they come. Yeah, you can drop a comment if you want to. Alright? So my name is Gloria Ade once again. I'm the Pips grabbing chick, and I'm here to teach you to trade to profits. I see you again in the next video. Have a good life. Bye bye.